Good afternoon, traders. It's Simon at Kairos Capital Markets with the weekly review of AUD, pound yen, and euro dollar. So, looking again at the DXY this week, we can see it broke down nicely and has stopped at the 94 level. Now, obviously, we were a little bit concerned about the little mini double bottom that could have happened, but I was still confident enough to say the dollar was looking more weaker than bullish, and obviously we broke down. So the fact we broke out of this range now down to 94, I'd expect to see 94 being a key level there. I'd expect some buying, or at least people taking some profit. And as you can see here, people had already done so. If you put 94 in here, there you are. You can see people did take profit there, and that it's moved up quite nicely. So what I'd expect now, really, in all fairness, is a pullback, a move upwards now towards this blue area here. As you can see, it's an area of interest. So 94.6 would be roughly where I think the dollar would move up to the next couple of days, Monday and Tuesday. And then we should see a sell-off to complete, or actually at least move downwards to get you better value on the weekly perspective. Why do I think that? Well, let's just recap. We had a couple of months here of doing nothing. Huge move up, arranging some form of flag here. You could say flag channel, whatever you want to call it. It's a pattern, it's a holding pattern. And now we've broken to the downside. The fact we've broken to the downside says to me at least 93 we'll be getting into. And I do believe we'll get to touch this blue box here. How does that look though on other pairs? So on the Aussie dollar, on the weekly perspective here, you've got a nice bullish engulfing candle. It looks really nice. It looks quite bullish for the week now. But looking down in the lower time frames of the daily chart, you can see we've just stopped at this daily 50 again, and that would give me concern to go long now. Bear in mind it's failed to break its daily 50 EMA since, well, February, we can say March this year. So 1, 2, 3, 4, 5. This is the 6th test now of the daily 50. I do believe it would go above the daily 50, but when you got to trade, I wouldn't want to take it now long. I'd think it'll come back down. If you notice at the moment, there's deceleration candles here, so the candles are getting smaller and smaller. The volume is exactly the same. These rejection candles, you've got a lot of confidence to say to sell as well, unfortunately, so I wouldn't go long straight away. And when you look on the lower time frame, the 4-hour chart, you can definitely see this inverse head and shoulder pattern we did highlight last week. It's broken out nicely, so a pullback to test the 4-hour 50 and the neckline of this inverse head and shoulder pattern would really be ideal and quite expected, I'd say, this time. So I will be looking for a long around the top of the inverse head and shoulder pattern. I don't believe there is any good short opportunity at the moment here off the daily 50. The reason why, we come down to the 1-hour chart, it's still testing the 1-hour 50. It's still putting higher lows at the moment, so I wouldn't actually want to do anything. If it done something like this, like that, and then pop back up there to say test this 1-hour 50 EMA to the downside, I may find if you get a little 1-to-1, maybe a short-term trade, that's possible. But if it's not 1-to-1, then I won't bother with it. There's no point taking the risk there. I'd rather go long, to be quite honest, once it tests the 4-hour the 4-hour head and shoulder pattern. So euro dollar, I quite like euro dollar in itself. This is the daily chart. You can see now we put in a higher high. We can definitely see this is a higher low. We did highlight last week, or a couple of weeks now, we did think it was going to happen. So there's no surprise for us here whatsoever. We look at the weekly chart. You can see it's accelerated that nicely, and you see my target of 1.185 to 1.2. I still think this blue area here is where price will head next. Again, not too concerned about the weekly 50 EMA. It's always been chopping in and out of it, so just a move up higher now would really be expected. When we come down to the lower time frame, we also have an ideal scenario here. So 1.171 is definitely a key level there. It was something we highlighted last week, it was. Now, when I look down the 4-hour chart, it's a lot of mess there. Kind of what we expected, but this is now just going to go there now as such. That's pretty much what it's going to do. So if I now just delete all this mess of everything, we don't want all this now. It's to clear all this up. Always nice to have some clean charts here, guys. And what I'll do now is just draw in this trend line there. There you are. And what we've got now is this. We've got a key level 1.17, 1.171. Just highlight that in the box. You're going to have the 4-hour 50 EMA and this upward sloping trend line, plus the weekly is going to be on your side. So for me personally, if you place an order there, put a trade there, and then target, like I said, you can target 1.199, and that therefore is a 4.5% trade. I'm already long this pair, been long ages ago on this one already, so I'm quite happy to keep my position open like I have done. This is what I expect will happen. So the euro will move back down, test this box here, order gets triggered there, and off you go. Why is my stop here? Well, it's below this here, below the 4-hour 50, below this upward sloping trend line. Well worth the risk, well worth the trade, because if you are wrong, you do get stopped out, there will be another opportunity to take it long again at some point. So I'm happy for that one. And so yes, for the following week, we do believe euro dollar will head up to at least 1.185, if not to 1.2. Obviously though, it will move down first of all on Monday. Pound yen. Well, it's been a weird one, pound yen. So I'm going to show you the weekly chart. We put this trend line in last week, if you remember, and you can see clearly it broke up massively, then closed back down again. And that's testing this area here, this little mini double line there, all the way through. So for me personally, although it's moved up aggressively, it's also dropped back aggressively, and that's given us a higher test right at the key level, right on the weekly 50 EMA, and around where this trend line is. So for me personally, I see a double top pattern as well on the daily chart, and this is quite significant here. The only thing is that for me, volume isn't there, so you need to see what there is on the lower time frames. And when we do look on the lower time frames, we are being tested in the 4-hour 50 EMA. So I would need a move up, I'd need the head and shoulder pattern, I'd need some confirmation to actually take this pair short. However, if it does break down short, my target would be the daily 50, around about 145, 146 area, around this area here somewhere. Just target the daily 50, that's all I want out of that. Now, if we do get something, say a right shoulder here, let's say you got in on the neckline there, you put your stop above there, 145, so it's not even going to be 1%, so that's your problem there. I know obviously some people might take it shorter, a smaller stop, or place an order like this, place an order there and still target 146.7. That's a 2% trade. There's a possibility. That's quite a high risk trade there, not a order I would put in straight away, but if I do see some rejection there, it would be something I'd be interested in looking at. Okay guys, any questions, give us a shout. If not, speak to you soon. Take care.